everybody. Welcome to the Morning Vol Report. It's Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. Welcoming you to maybe what will be the last big Fed week. We don't know yet. We have an event, though, about trading basically row and increasing interest rate options. This date is incorrect. We moved the class to this Saturday. We just had a scheduling conflict last minute. How interest rates affect everything, using ETFs for interest rates, and also some risk management techniques around those changing interest rates as well. Let's get to the market. Okay. This is kind of newsworthy, I think. Google. I'm sorry, USO. Making a move. OPEC did a little surprise. I think that's helping keep the market moving a little higher. I am not going to be surprised to see all the indices up again. We are in some kind of funky rally mode. You could call it since the election or not. It's up to you, but that's essentially what we have. Oil moving higher. You look at Exxon. Okay, a lot of these stocks are starting to get back to sort of like their 2-year levels, close, getting there, right? But even Exxon, not so far ago. Also, the smaller drillers, like there's a couple of favorites we have in here, stocks that could come back. Seadrill is one. Here's a 2-year chart. Rig. Also, if you like the ETF, that would be more like XOP. All getting back to much better levels. And I really don't know when that abates. As far as broader market goes, it seems to be very rally on whatever the president-elect's doing. And I can't think of really another reason. The last one is the Fed being out of the game. After 6 years of Fed involvement, treasuries are starting. I mean, that's kind of like I would view as sort of the lowish point when the whole idea of ending QE was going to happen officially. We had Brexit issues. We had, I think, random risk issues. And if the ECB also announced what they're doing. They're expanding the program, but cutting down the dollar volume, which probably means that they could just keep cutting down the volume. They could keep it open, but just keep the dollar volume lower and lower and lower as time goes on. I think you have an into the end of the year trade. Technology is starting to catch up with everything else. I have a favorite basket like Google, Microsoft, Cisco, Intel, just like all the old school stuff that now pays huge dividends and has growth. I think you buy the Qs, that's all part of the package too. But, you're back. They have now essentially more or less caught up with, it hasn't done what the S&P/X has done though, okay? Financials propelling this to all, to crazy levels. So you could see technology, quote unquote, catch up. The bellwether for the banks is Goldman, and it's finally slowing down a little bit after, a 60-point rise. But that's all you can say. It looks like it's kind of valued now for whatever might happen. So I think there's still potential in oil. There's still potential in commodities. Financials seem to getting a little long in the tooth for the rally. But if you just go under the assumption that dollars tend to flow back into places they have not been for a while, which is what seems to be happening now, that's where to look. So, and most of the stuff we have in the strategy otherwise is kind of based on that idea. And lastly, volatility. Okay, we have kind of a weekend markup. There's nothing surprising here. Just keep an eye on just the vol products to see if they catch a bid. VXX caught a small bid this morning. But, I mean, as far as it looks like, rates are going higher. the market's okay with it, and let's get on with things. That's kind of what the pricing looks like here until the end of the year. Now, they could throw a monkey wrench in it, but that's essentially what we have. And lastly, we'll take a little peek into how they're pricing VIX futures. Okay, if you look here, the future expiring for Wednesday morning is midpoint 1275. Okay, so we're not, it's at least it's really not expecting VIX to drop significantly into the Fed, right? At least for right now, you still got kind of a healthy contango. The DEES 21 future at 320. Post-Fed, you could see 11.5 again, which means that this future is roughly, you could see this whole complex here drift lower. Okay, the Jan again is pricing. I would say it's normal at this point, but I think it's really pricing or looking. I'm sorry, the Jan 16 is the next serial one. It's pricing. It is pricing a bit of a it's expecting VIX actually to go a little lower. We had been seeing that around $4, $3.75 or so, and that number is starting to just reduce a little bit. So the way it's actually set is you have relatively more expensive futures kind of hanging here, waiting on the Fed. If kind of things go as planned, the next level is the sort of the 11 handle for things to hang out in. And that's what we have. All right. For all of you, we have our some gold classes tonight. We have a normal week at option pits. And we have our Saturday class this Saturday. Look for more announcements about our volatility course coming. We'll start, I believe I have it on the calendar for January. Like say it'll be like Tuesday the 17th when it starts. For all those who are interested to sign up, will be coming shortly. All right, everybody, you all have a good day.